Bloomberg Audio Studios. Podcasts, radio, news.
This is the closing bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Scarlet Fu.
We are, of course, getting some earnings as well, including from United. Let's get right to it as we see those shares bounce around in the after-hours trade, with the company saying second quarter adjusted EPS coming in at $3.87 a share. That's a beat of about 3 cents. As far as revenue, the company basically does say that the revenue did come in above estimates, with operating revenue at $15.2 billion and passenger revenue at $13.84, though we should point out passenger revenue is a slight miss. The street was looking for $13.92. The guidance for the third quarter, the current quarter that we're in right now, adjusted EPS $2.25 to $2.75. That's the range the company is giving. The high end of that range, $2.75, is above the average of street estimates for $2.65 a share.
And we're seeing shares of United kind of bounce around. They were down about 1%, now slightly higher as well. Well, when you look at that guidance, what strikes me is that the full year adjusted EPS of $9 to $11, the midpoint of that is higher than the consensus estimate. But when you look at what they have for this quarter, the third quarter, that is a little bit lighter than what analysts had been anticipating. So perhaps things getting pushed out to the fourth quarter rather than seeing any kind of blue skies immediately.
Some really interesting commentary in the press release. The company saying that beginning in early July, United has seen a sequential 6-point acceleration in demand and a double-digit acceleration in business demand versus the second quarter. The airline attributes this to less geopolitical and macroeconomic uncertainty and has updated its full-year adjusted diluted EPS guidance to $9 to $11, underscoring the resilience of United's brand-loyal, revenue-diverse business model. The company also said that in June, United at Newark, and this was a big question given the challenges that Newark had, they said they led all other major airlines in on-time performance and lowest seat cancellation rate at all New York City area airports.
I'm curious to know, are airline valuations attractive at current price multiples, or are some carriers better positioned, like Alaska or legacy carriers like United? And how are airlines managing non-fuel costs, like labor, maintenance, loyalty programs, which we all love? And lastly, is technology, especially AI, really helping?
Yeah, these are all good questions, and these are all things that strategically investors will want answers to. But in the immediate here and now, the focus is going to be on the fact that this full-year adjusted EPS is a lowered range than what it had previously seen, $9 to $11, whereas previously it expected $11.50 to $13.50. So again, keeping an eye on those shares. As for the trade today on Wednesday, it was a really interesting day because the S&P 500 was bouncing around, but in the last 2 or 3 hours, we saw a steady rise higher. And by the end of the day, look at the IMAP. You only have 3 sectors in the red. Energy stocks down about 0.8%, and communication services and consumer discretionary, basically little changed. Healthcare, REITs, and financials were your top gainers on the day.
All right, I had quite a few gainers to choose from. I want to start with Johnson & Johnson, one of the best performing stocks in the S&P 500. The company beat sales expectations and raised its full-year outlook. It showed confidence even as the pharmaceutical industry faces threats of tariffs and a crackdown on drug pricing. Shares higher today by about 6.2%. The company increased the midpoint of its 2025 revenue projection. It raised the midpoint of its full-year adjusted earnings outlook. Sales in the quarter reached $23.7 billion. That was ahead of the average estimate from analysts. Also, watching what happened with asset management stocks today. In general, they moved higher, including Apollo Global Management. The Trump administration finalized an executive order that would pave the way for 401k retirement savings plans to invest in private equity. This, according to people familiar with the matter. Shares of Apollo, ticker APO, up 4.8% today. And finally, quantum computing stock, Rigetti Computing. It's typically among the most actively traded stocks, but even for a stock that's actively traded regularly, this was a day of outperformance. Shares surged today more than 30%. This after the company said in a press release that it succeeded in demonstrating the largest multi-chip quantum computer in the industry. This milestone is a 2x reduction in the median 2-qubit gate error rate from previous best results in its 84-qubit single-chip Anka 3 system. I don't know exactly what that means, but investors were pretty excited about it.
Let's not have
I was going to have you translate it for me, Romaine. I know you're like big into these quantum stocks.
Yeah, I am actually.
I know.
Okay, so now it's time for decliners. We have Ford down by 2.5%. The car maker says it is recalling almost 700,000 vehicles to address a long-running issue over cracking in an auto part that can leak fuel into the engine and cause fire. So the action applies to a certain Bronco Sport and Escape models from 2020 to 2024. Next, we have Bank of America. Ticker is BAC. Shares are kind of flat, but down by 0.2%. So the stock edged between gains and losses, but ended in the red. We have the bank reporting trading revenue that beat analyst estimates, but we have Evercore saying that the result was largely in line and not overly exciting, with trading revenue better than expected and tax rate lower than expected. And last, we have Amazon. So lots of headline for this stock. It's down by 1.5%. Amazon carbon emissions rose for the first time in 3 years in 2024. We have environmental watchdogs really watching this key metric. CrowdStrike also expanded its collaboration with AWS. And lastly, the third headline for Amazon, Cantor Fitzgerald raising their target on Amazon to $260 from $240.
All right, let's check in on yields, because it was a really interesting day. We talk about the idea that a lot of the knee-jerk reaction to some of those headlines on Powell's did get reversed. Not necessarily so when it comes to the Treasury market. You did see yields go down across the board, but what is interesting, you actually saw the yield curve steepen for a fourth straight session, and it's a significant steepening as well, because you talk about this idea here that with a lot of this now weighted back towards the front end of the curve, what exactly are investors pricing in? They may not be fearful of Powell being removed prior to his May 2026 term ending, but they are concerned about how the political pressure might influence the decisions going forward and the decisions after, and what that might mean for inflation.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.